Hello, trading is closed on September 13th, 2021. We always begin with our disclaimers. Let us do that. It's my trading plan for tomorrow, the 14th of September, 2021. Please remember I can be completely wrong, and any trade you make should be at your own risk. Look for the pattern with the early high. This is it. Tomorrow also has the early high. The pattern tends to have an early high and a late low, which this did. But what's unusual is the late low was above these other lows, and we closed over all the other lows. So after dropping all day, undercutting the prior low, we closed over all the lows and even over some of the highs. Now, I don't know how we'll open tomorrow, but if we can maintain this, if we don't gap down, if we don't gap either direction, probably take out this low, this is a positive pattern and should lead to higher prices. Now, we had an ideal situation. Let's just go over what we said. We said gapping up strongly remained possible. We got that. The ideal situation was to gap up, overtake Friday afternoon's high, reverse promptly, undercut Friday's low. It's ideal, wasn't assured. We came pretty close. We got a gap up. We missed this. We missed overcoming this high by a few points. We then dropped. We undercut the low. There is support under the low. This is a wall. This is a wall with a gap, and this hole fills, and there's support under this low. And for now, at least, that's held. So we made multiple lows and closed over all of them. MEJT during the day as we were dropping said this drop wouldn't stick, said it was a false move. We'd overcome this high, which we did. And that's played out. This is the volume chart for it's a continuous contract, so it's really based on the December contract for the E-mini. Spikes like this are associated with lows in the market. Of course, you could have a higher spike tomorrow. I don't know. But when you get that many contracts traded, again, it's a sign of capitulation or hedging, and is a sign of a low. Over the weekend, we had this somewhat confusing choice between two different wave counts. I think that the main wave count went out after today's action. This is the main wave count. We have our magenta A, magenta B, magenta C, and C is equal to A. So it's a reasonable candidate for this drop from the all-time high of this leg being completed. Of course, you can have other Fibonacci relationships too, but there's just one more argument in favor of a low at this point. Now let's look at this drop from Friday afternoon's high on the 5-minute chart. This is a 15-minute chart. On the 5-minute chart, you have your A, B, C, D, E in what I'm calling an ending diagonal triangle. This doesn't look like a three-wave structure, but again, that's the open. And if you look at overnight trading, it is a three-wave structure. So if that's correct, and of course at this point in the pattern, you can count in any number of different ways. The target is to overcome the origin, which is what I was thinking would be ideal if we overcame today. We still normally get more than we did out of the ultimate buy. And so if this is in fact any diagonal triangle and we overtake these highs, that will play out. Of course, as always, if we gap down smartly, or even gap up smartly and undercut these lows, the whole pattern's killed. and that we won't know until tomorrow. But all these things are arguing for a counter trend move higher. Tomorrow's pattern has a early high. We could still gap down. We rejected the morning gap up, dropped under the origin of the wall, found support, closed over all the intraday lows. If we can keep this, if that can be maintained, it's a bullish pattern. Retained at the opening tomorrow. The preferred wave count also argues for higher prices. If that happens, we also had a volume spike in the E-mini futures, and that's also associated with market lows. But despite all these things and the positive close, breadth deteriorated further. Fewer stocks are participating in the rally, and I think rallies in this environment have to be considered counter-trend moves. We still need to undercut a significant prior low and hold it. If you undercut it in reverse promptly, it means nothing. We need to do that to confirm the highs in. But even though for tomorrow, absent early weakness, I look for higher prices, even though that's true, I think it's a counter-trend move. The odds are very good. We've seen the high, and that lower prices are on the way. I would be happiest if we overtook the high here and did not overtake this 45, 24, 39 MEJT target. But that's really threading the needle pretty closely. And I don't always get everything I want. You could have you could overtake this and just have a new failed target, which is what I want to see at the high, even though it isn't a requirement of the system. It happens often enough that I get suspicious if I don't see it. So tomorrow's pattern has a early high. Everything I have over the short term is calling for a counter-trend move up with a significantly higher target. But again, early weakness, undercut these lows, the argument falls apart, and we won't know that until we see tomorrow's opening pattern. And that is today's call.